Hello and welcome back to Swing Trading Masterclass by Wealthy Education. In this video, how to trade support and resistance levels. So support and resistance is simply a term used to describe points on a chart where price won't necessarily be able to break through or break below. So think of it this way. If price is going back and forth, but can't break down, in this case, say $101, well, that's being supported. That is support. This is resistance at 97.5. If price just can't break it through that level, it's being resisted. So there are multiple reasons why support and resistance can occur. But typically what it is would be, in this case, sellers trying to dump a stock or an asset at this price. So they keep trying to push, but somebody's got a lot to dump off. It's a large fund or something. And then there's just not enough buyers in the market to push higher. Just as in this case, in support, buyers are sitting just below and they are absorbing all of the inventory coming into the marketplace. When larger funds are buying or selling something, they don't trade like you and I. They will find a price that they need to get out of, and they will revisit that price several times, because if they throw all of their stock or whatever into the market in one shot, there will be a major, in this case, if you're a seller, if all of a sudden you sell, it may take a big move lower to fill all of your orders, because you have to keep in mind that for every seller, there has to be a buyer and vice versa. So if you have, say, 100 million shares to dump off, and there are funds out there that will have that, if you try to dump 100 million shares in one go, it's going to find 100 million buy orders as far as shares are concerned underneath. And that could have some of your order filled all the way down here. Well, you don't want that. So you might sell 1 million. You might sell 500,000. You might sell 250,000. Every time it gets kind of close to this price. They have to trade completely differently than us. So therefore, these big firms, these big entities decide where the buyers and sellers are going to find support and resistance. So you have to look at these areas as places where institutions are getting involved. So you can go to this little menu here. You click on this trend line menu, and you go to horizontal line, and you just click on the chart. And you can see there's a little bubble there. And if you right click on that, you can go to settings, and you can type in your coordinates and, text if you want text on it, style, etc. So let's just go ahead and type in 90, just show you that it anchors itself at $90. So what you're looking for when you drag this across the platform is you're looking for an area where price seems to struggle to get through. I will tell you that quite often it is at a major round figure. So like in this case, $80. And you can see that price did struggle to get below 80 and stay below there. So that is an area that you could call support. Now, as I mentioned earlier, there's also resistance. So you could draw a line here, go to settings, and we'll try 105 initially. And notice how that's right where we topped out. Now, this isn't to say the support and resistance can't be at like 104 or 104.5, but they do tend to happen at these big levels. Let's go ahead and go down to the hourly chart, and it gets a little bit more clear. Now, there are going to be support and resistance levels on the hourly chart. that we will want to pay attention to. In the short term, you can see that this is an area that sellers can't push through as of recently. And then here as well, you can see there's an area. It's not perfect. It never is. The strongest ones are by far almost always going to be the ones at the 00 marks, so to speak. Here's Monero. So let's try a couple of big round figures. You can double click on it and just bring up this right away. You don't have to do the pull down menu. So let's try $100. And then let's try $50. See what we get. Okay, well, you can see there definite resistance there, support there, etc., etc. Now, the reason this is important is because support and resistance is the basis of most trading systems, including the stuff you'll be learning here. Here in the euro, this is the weekly chart, you can do something like this initially. Now, when you draw out these lines in 500 pip intervals, which is just 500 ticks in currencies, you can see that maybe the markets aren't as random as some people seem to think they are. And as a swing trader, you want to take advantage of this. So there, it's every 500 points. There's a line, and you can see where buyers and sellers have fought over these lines. Some of them are much more relevant than others. Like 115, for example, is very relevant. 1.15, just as 1.05 is. 1.25 is most certainly relevant. 120, relevant. 110, relevant. But notice how some of these are a little bit more stringent than others. There. Definitely down here. And right here. Now, you can drill down from here and go to the 1 hour chart to find smaller trades. But truly, as a swing trader, what you're looking for is, and we'll go through this later, but you're looking for price action, for price to do certain things in these areas. And you take advantage of that. In this case, you sell it and you pick up 500 points. That is the job of a swing trader. It's very important to trade around these levels because that's where the market moves. There is a lot of noise between the two, a lot of chop. You place your trade and you just walk off. When you look at this, one way that I like to think about support and resistance is it's like a building. And in this building, you have floors. So let's just say it's 5 floors in this case. When you go from floor 1 to floor 2, the resistance right here becomes support. You can see market memory comes into play. Why is that? Well, people who were selling here are very happy to get out of this at break even. People who missed this move are very happy to get involved in trying to take advantage of this because they're worried about moving or missing the move in the market. So sellers trying to cover their position have to buy back at a small loss or break even. Those who missed the move are looking to buy on a pullback because it represents value and what they think could be a bigger move, and it does in fact happen. So this is why what was once the ceiling becomes the floor, and what was once the floor becomes the ceiling. So you'll see this time and time again. Notice how we go from floor 1 to floor 2. So the ceiling here in floor 1 is now the floor in floor 2. We rally, we break into some resistance here, but we do break above there and we go into level 3. We don't even get back there. We go into level 4 here. We pull back. The ceiling from level 3 is now the floor from level 4, and you see that. So that's how this works. That's something called market memory. And again, it's because people are covering positions or happy to get out of break even or whatnot. Almost any technical analysis, and quite frankly, I struggle to even kind of consider one off the top of my head, system is going to use this as its base. And in fact, some traders simply just use this. That's all they use. We'll use indicators on top of it and such to kind of strengthen the odds in our favor. But it makes more sense if there's an area where there's been a lot of buying, for example, in the euro, to buy it once we get closer. You don't want to sell into that. There's plenty of orders there. Just like you don't want to be one of the buyers up here. Now, if it breaks above, that's a different story, but it hasn't. It hasn't been able to close above there. So with that in mind, the homework from this video, and this one definitely has homework, is go out, find assets to chart anything that you can chart. You can find support resistance. Look at big figures, like in this case, every 500 points. In this case, $50 in Monero. But I'm willing to bet that if I try to split the difference, you can see, that $75 has mattered as well. And when you lay this out, you start to notice that the areas that these markets trade in will be different for each one. In Monero, it looks to be about $25 is where a lot of people get interested. So let's try 125 just as a quick example. Yeah, see, you can see that matters. And then 150. So you kind of can tell the rhythm of the market, if you will. Doesn't mean that it has to go directly to that level and to exact pennies, but it gives you a roadmap. It tells you where to start looking for trades.